Welcome to Mortgage Giants. I'm tall, he's taller. Let's talk mortgages.
Are we ever going to talk about how tall? Like we're seated this whole time. So those that don't know us, there's a lot of guys that are 6'1" saying,
Yeah.
I was the tallest in my class. But
No.
no. I wanted to start off this one today and talk about with the cost of housing increasing. Maybe it's slowed down from maybe the peak, but it's still up.
Yeah.
Overall, it's still up. And then with interest rates currently being higher, I think there's a lot of, maybe younger first-time homebuyers feeling a little discouraged, to say the least, about, their potential for buying a home, getting into a home, out of rent, because rents are going to creep up again.
Yeah.
If you're in a locked-in lease now that's not up for a while, maybe you got a good deal and you can ride that out.
Yeah.
But when that lease is up, you might be facing a higher renewal, increase to rent. So that's going to re-spark the buying conversation.
Yeah.
So now, owning a home in Canada is still a privilege, I think. I think a lot of us over the years, we've shifted it to it's a right. We all deserve home ownership, and I do agree with that. But what are we going to do to make that happen? Now, that might mean a little bit of sacrifice is needed to achieve that goal. Maybe whereas a few years ago with low interest rates, you could qualify easier. You wouldn't have to maybe disrupt your current spending habits.
Yeah.
But maybe that's changed a bit for a lot of people.
Yeah.
And now they have to ask themselves, how badly do I want a home? And what am I prepared to do to get it?
Yeah, absolutely. I had this exact conversation with a client because funds were very tight and they found the home that they absolutely loved.
Yeah.
And we needed enough to show some closing costs, and they were just right there. And they said that they would be able to sacrifice and go cheaper on groceries for the next 2 months to save up that little bit extra needed.
The hot dog diet.
Exactly.
Yeah.
Instead of being like pulling from investments or whatever, this is what they've had for funds.
Yeah.
And it just didn't quite cover what we needed. So they're like, we will do this, promise. And they did.
Yeah.
So like, there's the simple sacrifices that you can make
Daily.
to get in. Like, I know it probably sounds ridiculous because lots of boomer people say like, well, cancel Netflix or cancel your coffee or whatever.
Right.
If you are strict about things like that, it can have an impact built up over time, not in the sense of like you're getting into a $500,000 home instead of a $400,000, but getting into home ownership just in general, it can help with.
Yeah, for sure. You want to explain closing costs just quickly? You want to run through?
Yeah, for sure. So typically, what the lender wants to see is money on top of down payment to cover things like legal, appraisal, home inspection, as well as they want to see extra funds to furnish the home and things like that.
First mortgage payment.
First mortgage payment. And typically the lenders here in Alberta want to see 1.5% of the purchase price in closing costs on top of down payment. That can change for other provinces, but that's what we're looking at here. 1.5%.
Yeah, so when we talk about saving for down payment, it really is like that 5% is the standard target maybe you have set, but really it's that 6.5.
Yeah.
Is really that safe amount that would make your approval go smoother.
Yeah.
Showing that that little buffer is definitely a massive factor that the banks are looking for.
Yeah.
Yeah, and I mean sacrifices. If cars are always a big part of a mortgage application.
Yeah.
For a lot of families, it's one of the biggest payments and will be the biggest payment outside of the mortgage. So, do you need the new car?
Right.
Is a car, and I want to be blunt with this, is the car more important than the house?
Yeah.
Is driving a new truck more important than a house?
Yeah.
It's that simple sometimes.
Yeah.
Especially, I can understand if the truck is a work vehicle and you use it to earn your living, totally different conversation.
Yeah.
But here in Alberta, we have a love of obsession with trucks.
Yeah.
And it's like, you're an accountant.
Right.
Like, you don't need,
Yeah.
a new F-150.
Yeah.
So it's just, again, it's prioritizing. It's really analyzing the old basics of needs versus wants.
Mm-hmm.
Do I need a commuter just to lap the Henday?
Yeah.
Get me from point A to B?
Mm-hmm.
If that meant home ownership,
Yeah.
a better area for your kids to start school.
Yeah.
You're going to make that sacrifice. And it is a sacrifice. Like, hey, we all get accustomed to things, and we love our things.
Yeah.
We love them. And it's a sacrifice to lose them. So I'm not minimizing that.
Yeah.
But it's just the prioritization of what you want.
Yeah. There's also the idea of sacrificing getting the dream home on the first try,
Mhm.
right? Like, you're not living in the same home that you bought first, right? I'm not living in the same home that I bought first. There's an element of getting into home ownership, knowing that this isn't the forever home. And once income increases and like you build equity, you're going to be able to make bigger moves and find that forever home. Whereas like now there's definitely an element of some first-time home buyers needing like that big home right away. Like, can you sacrifice and make do with a smaller home for the short term just so that you can get into home ownership versus stretching yourself super thin
Yep.
to have the bigger home?
Yeah. Yeah. I think that this is a fairly understood point now, but just to talk about like buying now and upgrading later, as long as you're going to buy a home for personal use, you can always use 5% in the
Mhm.
future. So just to be clear, if you were to buy a home with use your 5% down, you get into a home that gets your family started, starts building equity, you can buy the next one with 5%. I just want to
Yeah.
reiterate that because that isn't standard knowledge.
Right.
It's common.
Yeah.
But just to make sure everybody knows that you can buy the next one with 5% again,
Yeah.
as long as it's for personal use. So just don't think that next down payment is such a insurmountable,
Yeah.
dollar value that you just don't think it's going to be possible. You got to really nail it on the first time.
Right.
That's not the case. And again, like back to sacrifice. If you do stretch for that perfect home,
Mm-hmm.
that might mean you're going to sacrifice family vacations, tickets to the games,
Going out to eat.
going out to eat. It can really. So again, prioritize.
Yeah.
If you're a homebody by nature,
Yeah.
your home is your castle.
Yeah.
Okay, great. But if you are a person that does have a social and active friend group that likes to travel for the ski trips,
Mhm.
likes to celebrate birthdays in the mountains, likes to, that will cause you emotional and social pain.
Yeah.
It's never fun to say, I can't
Yeah.
do that.
Especially if you're used to doing that.
Especially if you're used to doing that. So is it better to take that home well within, your approved limits so that you can still say yes?
Yeah.
To those social events and engage with your community.
Yeah.
There's a tremendous mental health value now that we're talking about. Like
Yeah.
if you're trapped in your house and your castle's now your prison,
Yeah.
there's some mental health things that need
For sure.
that start to maybe cause some stress around the house. And,
Yeah.
amongst partners and
Yeah.
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 So-
And like there's so many different ways that you can sacrifice to help your situation out. And specifically we're talking self-employed because we need to show a strong 2-year average. If you know that home ownership or you're renewing or doing something with your mortgage in the next 2 years to show more income for those 2 years to help you qualify for more, yeah, it's going to be a pain. You're going to have to sacrifice and pay more taxes because you're paying yourself more, but you're going to get into a better situation for that upcoming mortgage in the next couple of years.
Yeah, and a lower interest rate if you're able to stick to A lending and not have to take a business for self kind of
Right.
higher rate program. The pain of paying yourself more income and paying those taxes for a few years is real.
Yeah.
Those are dollars leaving your bank account.
Yeah.
But if then you're set up for a long-term home at a better interest rate, you
Mhm.
will recoup those tax dollars
Yeah.
through setting yourself up correctly. So
Yeah.
again, that's back to sacrificing
Yeah.
up front in preparation for home ownership.
Yeah.
And that's something you definitely should be planning. And a mortgage broker shouldn't take that burden and that number, providing you that number on their own. They
Mhm.
should be working with your accountant, working with yourself. Like, get a team around you that can advise you on exactly how much you're going to need to pay yourself. Do some proper tax planning
Yep.
and make it, a good story.
Yeah.
Something that you can look back on and say, wow, like, we really set up the dominoes
Yep.
and we knocked them down, and here we are. Like,
Yeah.
it worked great.
Yeah.
So yeah, man, sacrifice. That's a good one. I think I could talk about this for a while.
Yeah. It's short-term pain for long-term gain.
Yeah.
And I think people have a hard time looking at the whole picture. They look at the singular item that is right there.
Yeah.
Yeah, it sucks. I'll have to pay more taxes right now.
Yeah.
But that's not, you're doing it for something bigger, as multi-steps and going through the whole process.
Yeah, for sure. This whole system we live in,
Mhm.
we have elected governments, they make policies, they come and go, governments change. But ultimately the rules are the rules.
Mhm.
The banks make their own rules. They have policy, they have guidelines. And then there's insurers, the CMHCs, SAGENs, Canada Guarantees. They have their rules and guidelines. They don't know you as a person.
Yep.
They don't know you're a great guy.
Right.
Like, they don't know
Yeah.
some of these things. So you got to know the rules.
Yeah.
And you need to work with a team that knows the rules.
Right.
And once you know the rules, they don't become rules anymore. They become a handbook.
Mm-hmm.
And those that understand the rules play the game better,
Yep.
effectively. They know how to score.
Yep.
The people that will constantly, like the libertarian in me, like, you just want to fight government, you want to fight rules.
Yeah.
Like, I get it.
Yep.
But you are constantly going to live in an upstream, nose to the grindstone,
Yeah.
and you're not going to always get ahead.
Right.
So how do we work within the rules?
Mm-hmm.
I'm fighting to go right up to the limit. Like, I love limits.
Yeah.
Like, I'll live on the edge, absolutely. But know the rules,
Mhm.
and find a team that knows the rules and help you work them to your advantage.
Yeah.
That's how you win.
Yeah.
Yeah. Without rules, games aren't fun either. Like, just even think about your kids. And,
Yeah.
if it's just mayhem out there and there's no objective, or there's no outline,
Yeah.
it's not fun.
Yeah.
Because everybody's a cheater. You're cheating. It's not, it's like finger pointing and,
Yeah.
but if there's rules, all of a sudden now you have a game, you have measurable success,
Yeah.
and you can actually get somewhere. And you can get somewhere together. Team sports are great. So get a team, know the rules. That's how you'll win.
And there's no sense in complaining that these are the rules.
Oh,
Let's
yeah.
just know these and work towards getting you what you need based on all of this
Oh
information.
yeah, we'll vent. Like, this is what we do. Like,
Yeah.
we'll talk about how the rules are need to be changed, and
Yeah.
and totally just bitch and moan about rules. Like, I love it. It's like,
Yeah. Right.
I'm really good at it. But at the end of the day, if we want to accomplish something,
Yeah.
you got to know the rules. And unfortunately, color within the lines.
Yeah.
Yeah.
And we're not here to say that those rules are perfect.
No.
Right? Like,
No.
we're here to play by those rules and
Yeah.
help you as best we can.
Yeah.
We're not saying that
No.
what we have to put you through is the right way or the best way.
No.
It's
Totally.
right.
No, we are on your side, and that's kind of the fun part about this too, is that we're all working towards a common goal. We are not in the business of putting more money into a bank's pocket
Yeah.
than absolutely needed. Like, we want to give the bare minimum.
Yeah.
We're not in that business.
Yeah.
At all. Yeah. So no, there are massive problems within the system. We do have provincial and federal organizations in support of the mortgage brokerage industry
Mhm.
that do advocate in Ottawa and do push for change.
Yeah.
So we are a part of the change, and by seeing firsthand experiences of home buyers, that does eventually make its way up to the boards, and then into the lobbyists, and so yeah, we always try to push for it to be better.
Yeah,
for sure.
but I mean that push doesn't always happen, and which means that we still just have to keep moving on in this direction. And
Change is constant. Like,
Yeah.
there's one thing about this industry is that change is constant.
Yep.
Like, what's gospel today will be, forgotten tomorrow. Like, property taxes is an example.
Mhm.
For a lot of years, it was black and white. If you're putting less than 20% down, we must collect property taxes on behalf of the homeowner every month,
Mhm.
and we will pay the property taxes to the municipality.
Yeah.
That's it.
Yeah.
That's all. Well, not no more.
Yeah.
Like,
Yeah.
some of the banks are just like, no, okay, that was too much. The administrative burden, not worth it. We actually now will not collect taxes on behalf of a homeowner. So they 180 all the time
Yeah.
too. So
And like certain like world situations have an impact, like COVID. All of a sudden,
Sure.
that created different income situations that we had to navigate as well, that were not in place beforehand.
oh, for sure. Like, job letters now stating that this person is allowed to work remotely.
Yeah,
They can now live in Cochrane and still maintain their employment in Edmonton.
right.
Like, that is allowed now. Like,
Yeah.
that was a change.
Yeah.
Simple things. They do have to react and change and adjust. Sometimes it's quick, sometimes it's not.
Yeah,
So that's our job. We have to maintain constant updates, understanding whose policy fits your situation, who's made that change
yeah,
first. That might benefit you.
yeah. And it could also happen because fraud does still happen. There might be new policy that a lender puts in play to show more documents or have more explanation for certain things that was not there a few years ago because of a new fraudulent type of activity that is building up steam out there.
Yeah, for sure. They're not. I think it's rare when a bank is putting in a policy just because they think there's a potential risk. It's because it's happened.
Yeah.
Like, they're reacting.
Yeah.
Like, if they're asking for something, and I'll ask why. Why do you want this now?
Mhm.
Like, why is this a new document required for this situation? And they'll have to tell me, like, well, it's because we saw, this happen.
Yeah.
This is a growing concern. We've been frauded and we've suffered losses.
Because
Because
of
of
this
this.
specific situation.
Yes.
Yeah.
So it's the more fraud
Yeah.
that occurs, the more documents that are needed, like
Yeah.
the more all of us, playing by the rules are impacted.
Yeah.
So that's why we all want to try to reduce fraud and reduce loss
Yeah.
and reduce defaults,
Yeah.
all that, because we all pay. Like, we all suffer through stricter guidelines, higher rates.
Mhm.
If the banks are losing money,
Yeah.
who do you think is going to pay for that?
Yeah.
We do.
Yeah.
We do, because they need to they're a revenue generating machine.
Mm-hmm.
They're publicly traded.
Yeah.
So if there's a massive amount of defaults and fraudulent activities, rates will go up.
Yeah.
Fees will go up. Insurance will go up.
Yeah.
So it is all of our jobs to protect fraud.
Yeah.
It's a massive problem if it goes wild. Like,
Yeah.
So I think overall in Canada, we do have very good numbers.
Yeah.
The amount of losses and fraudulent activity is actually, I want to say it was like 0.15 basis points. So of a bank, like, don't quote me on that, but I'm pretty sure that's in the range.
Yeah.
So of all of the dollars lent out, like, fraudulent activity is like 0.15%.
Right. So it's not much,
No.
but if it happens, the lenders are going to adjust to try and get rid of it completely.
Yeah.
And it just might come into play with your specific situation.
Yeah.
Unfortunately, where we need to go above and beyond.
Yeah.
Compared to a different situation.
Yeah. Yeah. So I mean, I guess just the ultimate, the end of the day, like, we all pay.
Mhm.
We are in the community. We are all Canadians. We need to. I like having a bit of a nationalistic attitude where we are all in this together. Like, I get it. There's bubbles, and we like to say, well, that's Toronto's problem. That's Vancouver's problem. But no banks are giving us regionalized interest rates.
Right.
We have very few regionalized policies.
Yeah.
So we are in this together.
Yeah.
And we need to maybe start thinking like that a little bit more.
Yeah.
Feel the pain maybe of our, fellow Canadians in the Lower Mainland and GTA, and
Yeah.
because until things want to go regional,
Yeah.
What are we gonna do?
But yeah, like I can't think of almost any regional specific.
The biggest one right now is the use of rental income.
Right.
I think some of the higher densely populated centers, like they're blurring the lines a little bit on what's acceptable rental.
Oh, like for rooms or
Contributory income, family members who don't need to be on the mortgage.
Right.
We can use some of their income to help debt service. The mortgage. So like that, some of those changes are kind of, I would call more regional.
Yeah.
Yeah, and there's talk about like regional. They'll be increasing maybe insurable mortgages, make from 1 million as the cap to like 1.25.
Oh yeah, just values in those areas.
Just the values, like what are you gonna? There's literally nothing to buy for 1 million.
Yeah.
Or under.
Yeah.
So there's that would be a regional.
Yeah.
They will say in these specific areas we're gonna make different purchases insured.
Yeah.
Insurable. Meaning you don't have to put as much down payment, and so that will be more of some regional things that will come up.
It's still so crazy that the prices are that high there that it needs to be changed.
Yeah. Whenever I run a pre-approval for a family as well, and I like to ask them, like, where do you want to be? Like, what price range do you want to be? I don't want to know this. Like, I don't want you to want to target the ceiling,
right?
Off out of the gate.
Yeah.
What home should provide you with the amount of bedrooms, the community you're after? I'd like to start with that number, if that's okay. And then we've build up the income history. We look at the household debts. And then oftentimes that number of the purchase price they're looking at is well below their limit.
Mm-hmm.
And I'll just be like, congratulations.
Yeah.
Like, that should make you feel very, very good that you're buying a home within your pre-approval limit. If you want, I can show you what that max would be.
Yeah.
But I really do want to focus on the fact that this purchase price that you've specified will meet your needs. And I really encourage you to stick to that.
Yeah.
So, because the world's an uncertain place, we have COVID. We currently have a war going on in Europe.
Mm-hmm.
That's wild things that, I guess we watch The Simpsons maybe more. We'll see more future predictions and learn what's yet to come. Man, that's crazy.
Yeah.
But like, I just really try to give that family that, hey, take comfort really in knowing you're buying in a very responsible price point.
Yeah.
And you should be able to handle some uncertainty
because
change is going to happen. There's one thing that is certain, and it's change.
Yeah.
Yeah.
For sure. And I think a lot of people come to the table so nervous because of what they see out there, and then to be able to provide that relief, like you're in a very good position for what you're looking for. It's amazing. You've done the right things to get here.
That's so true. It's a good feeling. Yeah.
But there's a lot of stress just associated with the home buying process right now because of what you see everywhere.
Yeah.
But Toronto is not the same as here. Vancouver, not the same as here.
No.
So they come to the table worried, like, what am I going to be able to get?
Yeah.
Because they hear everybody talking about how they can't afford this and can't afford that.
Yeah, for sure. I think the last thing I just to talk about too, about that, just when you mentioned nervousness, credit. Like, people are so nervous about their credit.
Yeah.
And you're not going to get a better interest rate if your credit score is 800 versus 700.
Yeah.
We need to think of this system more as a pass-fail.
Mm-hmm.
And if you have bruised credit, if you've got some history of lates in the past, we need to look at that. We need to really understand and develop a story as to why. If we can mitigate the bank's questions, saying, well, this was late because they moved, there's a change of address, and it was just a pure error on the client's part. You got to take ownership for it. It's your bill, you're responsible. But if you moved, bill payment got lost, okay, we can, address that.
Yeah.
But ultimately, if you pay your bills on time, you don't have things constantly maxed out. Your credit score is going to be just fine. It is worth doing a credit check during the pre-approval process.
Yeah.
It's not going to impact it to a point at all, or if at the few points it could.
Yeah.
It is not going to drop you into a fail situation. Like it is, it's great to be thinking about your credit score. You can never, do not make a late payment.
Right.
Do not make late payments.
Ever.
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 Keep your limits. Okay, you got a limit on your credit card. Try and keep the balance at 50%.
Yeah.
These are little things and tips and tricks that you're going to see online and whatever. All true, all won't hurt you, but ultimately, it's a pass-fail. The biggest thing is no lates. That's the best thing you can do for yourself.
Yeah. And provided we can stay on the A side, we've got a wide range of lenders that we can go to. So whether the credit score is 700 or 850, it's fine.
It's all fine.
Yeah.
It's the lates.
Yeah.
It's just the late payments that banks are going to hone in on. I would say keep thinking about your credit. Know that it's important.
Yeah.
Know that it's very important. But don't obsess over it, and don't worry about a credit report if it's for the greater good.
Yeah.
If you need to buy a home, you will need to get your credit checked.
Yeah.
Probably a few times.
Yeah.
It's okay.
Yes.
It's totally okay.
Yeah. And you're going to want to need that certainty. Even if we have to postpone the home ownership because of credit issues, we're going to want to know exactly what we have to do to get you from point A to point B.
Yeah, for sure. I literally have had clients that are so afraid and so nervous of their credit score, they don't want to check it. It's like, okay, well, then we can't buy a house.
Yeah.
Okay. I don't know. Maybe not yet. Maybe I'll call you in 6 months.
It's like,
yeah.
But
it's okay.
Yeah.
It's okay. But it's think of it as a pass fail. The 900, which is a perfect score, gets the same rate as a 700. It's a tool. Back to what I said earlier, the banks don't know you. They don't know that you're a good guy.
Yeah.
They have to use these systems and tools to get a read on your spending habits.
Yeah.
So maybe we'll do another episode on maybe just digging more into what's in a credit score, the information.
Yeah, specifically what they're looking at.
Yeah, what they see and what we see on our end. And
I
don't know if it's just our culture and just our age, and if it's getting less and less. I don't want to take away from any younger generations that they're not making sacrifices. They do. They have higher student debt. There is a completely different situation than what their parents went through and what their parents' went through. It's always changing. There's never a shortage of sacrifice.
Yeah.
But it's maybe it's a combination of sacrifice and prioritization. That needs to be discussed more.
But I think there is an element of you get to play the hand that you're dealt.
Yeah.
While the hand that you got dealt might be very unfortunate, we're not here to say that you should be able to do exactly what we were able to do or what they were able to do. But this is the hand that you're dealt. What can we get you based off of that?
And you're competing against your peers. So, the rules are the same for everybody at this point in time. So how do you want to get a team that's going to make sure that you have every advantage, that you can have in the competing marketplace.
Yeah.
Because if you're buying a home, so are, all of your peers.
Yeah. So
how do we make sure that you know the rules and you're going to, win out in that situation.
Yeah.
So yeah, I definitely don't want to say that there's a softness in our community, because I couldn't go and clear a field. I couldn't go and chop down trees
Right.
and pick rocks and make a plowable, farmable field.
Yeah.
Like, no,
Hmm.
no, not possible.
Yeah.
So, I mean, it's just generational. What are our challenges?
Yeah.
Are different. So let's not worry about the boomers. Like, don't care.
Yeah.
It's you.
Yeah.
It's about you.
Let's get you home ownership.
Yes. Yeah. Doesn't matter what the interest rates were in the 80s. Doesn't matter what a home cost was in the 80s. It doesn't matter.
Also, that comparing is not going to get you anything.
What are we gaining?
Nothing.
Learning from history, knowing that we're in, the highest interest rates, and like a person that was born in 2001 experienced the highest interest rates since their existence
Yeah.
today. What are we going to do with that information? Are we going to use it to your advantage? Are we going to stop you renting? Are we going to get you into, owning an asset that can appreciate over time that eventually turns into a rental property?
Yep.
What do you want to do?
Yeah.
Like, how do we work for you to make this situation work?